everybody, give me a second. As always, we are here and then we need to go here. And lastly, we need to go to here. And then we're done, all right? Good. All right, everybody, good morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX boss, broadcasting you live on YouTube and other streaming platforms, everybody. Welcome to the Technical Forex and Crypto Trading Course 101. Remember, trading is a learnable skill when you learn in the correct way. The goal is to bring you from zero to a millionaire trader in 3 years, potentially. Not in 1 week, not in 3 months, but in 3 years, in an institutional way. What does this mean? You are first an analyst and then you are a trader. You are going to graduate from this course when, number one, you have your chart set up and ready for trading. So we're working on this one with the Fibonacci's. Number two, you have your strategy in place. You understand how you win, how you lose. And number three, you have a complete understanding on how this market works so you can analyze the market and make an educated prediction. Please disclaimer, this stream is not trading or investment advice. We are here to learn, and for questions and homework you have my Gmail, and for extra webinar seminars you have Skype. Hello Alexander, how are you? If you didn't receive the free manual, everybody, so study the manual, right? We are in Fibonacci's, you know, so how to find the confirmation of Fibonacci in a downtrend, you know. So let's see what is written here. If you enter a low probability trade from the weekly standpoint, meaning low probability direction from the weekly chart, looking, scanning and analyzing the 1 hour, 2 hour, 4 hour or the daily chart is not going to help you. Wow, great concept, right? If you enter a low probability trade from the weekly chart, then the 1 hour, 2 hour, 4 hour chart is not going to help you. This is for tomorrow, trading Fibonacci numbers, how to adjust the confirmation, I believe. So if you didn't receive the free manual, please send me an email to mikefxboss@gmail.com. And if you want the little book of trading secrets, which is all about psychology and the mind traps, you know, as traders with this beautiful guy, please visit the website www.fxbossfx.com. Alexander, did you do the homework? Alexander, did you see the homeostasis video? Right? And anything else? So let's go to the Fibonacci's, everybody. The Fibonacci of the confirmation. By the way, today is the last day of the Black Friday. I owe you one more day, everybody. So the Fibonacci of the confirmation, we use the Fibonacci of the confirmation to re-enter trends when we have missed the entry at the C, capital C, to confirm the extension from the original Fibonacci of the larger time frame and the smaller time frame. As you can see, everybody, here on the picture. Yes, Alexander says yes. What did you learn? What did you learn, Alexander? As you can see, everybody, from the picture, you know, the capital A, capital B, and then you see the down swings, right? So the best pair for you to see this, everybody, is NZD Cat. So let's open NZD Cat, NZD Cat, NZD Cat. Give me a second. Yeah, it's almost Christmas. Celebration time. It's almost Christmas. Give it a second, give it a second. NZD Cat. Give me a second, everybody. I'm not sure if it was the daily or it was the weekly. ABC. Alright, so it was the weekly, right? Weekly chart, NZD Cat weekly chart. Alright, everybody, there you go. So you have the capital A, capital B, capital C, and then you have the, and this was broken. The market broke this one, so maybe it was the daily. Let me check the daily. The market fall was falling beautifully. Oh, there you go. There you go, there you go, everybody. I'm not sure if the market broke the A up in here. Okay. So here you have the Fibonacci's, right? Going down, going down, going down, going down. And from the picture, trading rules until the sub-D extension. So you must learn, for you to properly use the confirmation Fibonacci, you must learn the contrarian. My mind is burned out. Welcome to the club, you know. I mean, this is why 90% of world population lose, Alexander. You are going to teach me on Friday how homeostasis relates to trading. Alright, everybody, trading the rules until the sub-D extension of the contrarian is still inside the capital AB boundary of the original one. You are entering trades with 50-50 probability. Okay, so one more time, right? One more time. Just quickly, you know, if this is the original Fibonacci on any time frame, everybody, and this is price action, and then the market starts to retrace, right? Retracement. Okay, so here you have the capital A, here you have the capital B, all right, and then give me a second. All right, come on. All right, so something like this, right? And now we're going to chart the contrarian, changing colors. Okay, everybody, so here you're going to have the, just quickly, right? Sub A is going to be up in here, and then you have the sub B. All right, everybody. Yeah, focus on the contrarian, right? Then you have the sub C. All right, and orange goes to orange, of course. Down here you have the sub D. Okay, everybody? Now, if the market crowns in here and starts to go up, all right, this capital C is not confirmed yet from the contrarian Fibonacci. No, the contrarian Fibonacci is going to confirm you the, if the C is confirmed or not, right? So in here, right? So price action didn't count to the lower levels. Give me a second, everybody. Okay, so this is the sub D down here. Now, if you buy, here you're going to have the counter trend line break. Market is going to change directions. So what does this mean? I will send you a letter. All right. It's Alexander. It's not a video on trading, but it has a lot to do with trading. You know, it's one of the secrets. This is homeostasis. What you're going to fight with. Okay, so everybody, here you have the counter trend line break, and the market is changing directions. So this is a 50% rate. What does this mean? The market can go up to some level, and then it can go down to a further deeper retracement. All right, but if you can find, so I need to readjust my Fibonacci's. If you can, so delete this one. If you can find the contrarian Fibonacci, let's make it bigger. If you can find the contrarian even bigger, there you go. If you can find the contrarian Fibonacci, sub A, sub B, sub C, sub D. If you can find the contrarian Fibonacci with the sub D extension below the capital A, meaning this market to fulfill the sub D, it must break the original one. Boss, can you repeat please? Yes, sir. For the contrarian Fibonacci to fulfill the sub D, it must break the capital A. It must break the original Fibonacci. But the original Fibonacci is stronger than the contrarian. Alright, everybody? The original Fibonacci is going to win 7 times out of 10, 8 times out of 10, depending on how the higher time frame is positioned. So when then you buy the C, then you're entering an 80% chance trade. What does this mean? That the market has the 80% chance that it's going to move up and never come back down. Alright? This is what we say 80% chance. The market can still do anything it wants, but you know, blackjack setups, confirmed C, deeper retracement generally turn out and they never look back. Alexandra's got it. Okay, so then it's number 3. When you find the C, your stop loss should go 10 to 100 pips below the capital A of the original Fibonacci, and your profit take 10 to 100 pips above the D, or below the D, so in front of the D. Alright, number 4 is the most important. When you find the capital C, you should check the trend direction from the larger time frame and compare it to the lower time frame prior to entering the trade. Number 6, when you arrive at the point where the D of your Fibonacci, the confirmation, is above or below the capital D of the original Fibonacci, you should profit take at the D of the original Fibonacci. New rule today, so you have the original one, everybody, and capital D. One more time, give me a second. So this is the D, projected D up in here. Alright, and then we start charting the confirmation Fibonacci. Give me a second, let's do it like this. So remember, you start from the C, capital C, and we are going to chart. Now the confirmation Fibonacci has the same colors as the original one. So green goes to green, this is the second one, right? And then price action, consolidation, whatever. Let's say that it's like this. So now this is the last confirmation Fibonacci, everybody. This is your, and then prepare your cell phone. You're going to take a screenshot, everybody. Sub A. Let's make it smaller. Sub A. And up in here you have the sub B. Text. Sub B. Sub B. Alright, and then of course you're going to have a sub C, and then of course you're going to have a sub D up in here, projected sub D. Okay, everybody, now take a screenshot. Do you see that the sub D, it's above the sub D, it's above the capital D. Can you see, everybody? The sub D, it's higher. Can you see it? Alright, so you should profit take. Now you let's say the market comes down to pass support, goes back up. You should profit take at the capital D of the original Fibonacci. Alright? Take a screenshot, photo, cell phone, camera, PC, type in the chat. Done? Any questions? Boss, why should we profit take at the capital D and not the sub D? Because the capital D is the father. Alright? The contrarian Fibonacci and the Fibonacci of the confirmation are a structural part of the original Fibonacci. The contrarian Fibonacci and the confirmation Fibonacci are the subswings of the bigger picture. Make sense? Boss, can I cancel and replace? Yes, you can. You can cancel and replace the stop, everybody. Just be aware that many times greed comes in between, you know. The market tends to, at least the Fibonacci tends to retrace when it hits the D or forms the D, you know. So if you are reluctant to take profit up in here, make sense, everybody? Boss, what about the risk-reward ratio? In the Fibonacci Mastery, you're going to learn that risk-reward is not really an issue. What about the stop loss for the confirmation Fibonacci? If you are going to trade this pattern, great question by the way, if you are going to trade the pattern confirmation Fibonacci, stop loss goes on the confirmation Fibonacci. Great question, Alexander. So your stop loss should be below the sub A, everybody, and you should profit take at the capital D. Alright? Now some of you are screaming, what about risk reward ratio? Those are the rules. Make sense, everybody? No, don't do this. Don't put the stop loss below the A. Make sense, everybody? You are not, exactly, you are not trading the original one. Make sense? I cannot tell you right now, it's a lot of knowledge, you know, we cannot, but in the Fibonacci Mastery you are going to learn that risk reward is not an issue. Okay, everybody? See why I'm pushing you sometimes, you know, I'm pushing your ears, you know. Hey, you're trying to sell? No, I'm looking for traders, and here you have it. Fibonacci Mastery course for free if you join the Fast Track 5000 and Black Friday 50% off. But price is a filter, everybody. Makes sense? Type in the chat, everybody. Take a screenshot picture and print it out. Take a screenshot picture, everybody. Type in the chat done when you're ready. Done. Done. All right. Very good. Thank you very much. Oh, so here we are, everybody, and now this is the last one. Okay, how to use the 3 Fibonaccis. And then we go on the charts. Things to ponder. All rules apply to all Fibonaccis and all time frames. Every Fibonacci can have the contrarian Fibonacci. Every Fibonacci can have the contrarian Fibonacci and the Fibonacci of the confirmation. Yes, also the contrarian can have a contrarian. If not, how are you going to find the confirmed C of the contrarian? If you're a retracement trader, the contrarian is very important. And I always click on this. Okay, everybody, I need to get out. Okay, anyway, so number 3, when comparing the larger time frame and the smaller time frame, it's possible that the contrarian Fibonacci on the larger time frame is the original Fibonacci, and or the Fibonacci, the confirmation on the smaller time frame. Euro dollar, not to always mention AD cat, euro dollar is positioned like this. Euro dollar monthly chart, original Fibonacci is down. Euro dollar weekly chart, the original Fibonacci is down, but euro dollar daily chart, the original Fibonacci is up. Give me a second. Charts. Come on, Forex. Whoa, I don't have it. I don't have the Fibonacci. Okay, just quickly, right? Just quickly, high to low. And then what is blue? I'm going to delete this one because I don't see it. Was it blue? No, it was not. So green goes to green still. Green goes to green. Where's the green? There you go. I'm going to double check everybody because whoops, and it must be get out. All right, out. That's the low. All right. Let's see the candle. Let's see this candle number here. We need to double check, triple check. Double check, triple check. This high is 15144 15116. So no, it didn't hit the blue. So on the monthly chart, let's delete a few things. On the monthly chart, the original Fibonacci is this one, euro dollar. It's huge. Can you see everybody? Now the contrarian on the monthly chart is here. That's the contrarian. Alright, I need to build it anyway, not to waste too much time. So the original is down, the contrarian is up, but if we go to the daily, it's all messed up. Daily chart. Need to rearrange the charts. Daily chart, everybody. Daily chart. So I don't have it. Okay, let's do it. I don't have any other options. I cannot just blindly chart something, right? So just quickly, A to B, A, B, C, D, blue goes to blue. Blue goes to blue, A, B, C, D. Blue goes to blue, A, B, C, D. I believe one more. And it must be a high, so that's the high. High to low. Alright, can you see everybody? The original Fibonacci is up. On euro dollar daily chart, the original Fibonacci is up. And the contrarian Fibonacci, it's on the monthly, it's up too. Exactly. When comparing larger time frames and smaller time frames, it's possible that the contrarian Fibonacci on the larger time frame is the original and or the Fibonacci of the confirmation on the smaller time frame. Number 4, in other words, the retracement of one could be the extension of the other. I know it's complex sometimes in the advanced course, but you're asking me, teacher, why are you trading the contrarian? Because the contrarian is the original on the other time frame. Alright, this is the answer. Number 5, the capital D of the original Fibonacci is stronger than all the other D's from other Fibonaccis, meaning the Fibonacci of the confirmation and the contrarian. Number 6, always remember, if things get complicated, the larger time frame controls the lower time frame, and the market will always go in the direction of the greatest force. Monthly, weekly, daily. 7, trade only what you understand and what you're comfortable with. Don't try to do everything. And number 8, you're going to forget all of this, you know. As Julius says, it's a lot of information. No, there is a lot to learn. Number 9, the retracement and the extension from the higher time frames are more relevant than the retracement and extension from the smaller time frames. So the higher time frame still controls price action and movement on the smaller time frame. That being said, let's move forward. Yesterday we were talking about AUD CAD and AUD CHF, AUD JPY. That's the easy one. We are on the monthly bands. What you should do, everybody, at the monthly bands with the Fibonacci. Yeah, I'm going to show you, don't worry, give me a second. Out. Not all of them, just the monthly, right? So the Fibonacci, the original Fibonacci on the monthly chart, you know, it's like this, right? HUB original. All right. ABCD, green goes to green, right? D must be a high, so this is the second one, the original Fibonacci, everybody. All right. Now, can you see where is the extension? It's well above, out of the bands, right? Okay, everybody. So talking about trading, when this happens, you must, okay, you must reverse the Fibonacci. That's a trading rule. I know that for a fact 80% of you are not going to do this anyway. Make sense, everybody? Why we need to reverse? What's the probability of the if you don't need to be that smart. If you look at the market, right, what's the probability? So if you look at the market from 2004, you know, and you can clearly see the monthly bands, all right, what's the probability of the market coming up to here? Extremely low, boss. Exactly. This is why most of you are not listening still, but it's alright. In a few years of crying, you know, you must reverse the Fibonacci. Okay? How many of you are with me for the last 6 months? I'm telling you that I'm heavily short on the yen. Right? Boss, how do you know? I don't know. I'm just following simple rules and concepts. Alright, everybody? So that's the original Fibonacci on AUD JPY on the monthly. AUD JPY on the weekly. So here it hit the extension. Alright? Are we going to do one more going up? No. We are going to reverse the Fibonacci. Okay, everybody? This is the Douglas pen. You can write this down. This is from the Fibonacci Mastery. Rule number 1, why people, traders, don't make money with the Fibonacci. It's because they don't really trust the Fibonaccis. Okay, everybody? It's always the same story. Oh, how is he that confident? How is he doing? No, look how confident. You must trust the tool. Make sense, everybody? So far, everybody, is the up Fibonacci winning or is the down Fibonacci winning? Who is winning so far? If I would do the wrong thing, if I would chart another up Fibonacci, which one is winning so far? Yeah, it's debatable, but it's going to take some time for you to understand and monitor price action. That's a crown right there. But fair enough, you know, if you could have a different visual than me, you know. Would you say that it's the up Fibonacci winning or is the down Fibonacci winning? What would you say? Anyway, if you are charting the white Fibonacci, this is wrong. Alright, don't call me then, oh, you know, it doesn't work. You are not listening to the rules. Alright, everybody? Now, we have enough price action to chart the contrarian too. There you go. But we don't have enough data to chart the confirmation, not yet. So we have on ADJPY weekly chart, we have the A, we have the B, we have the C. What is the C? The C is the highest point inside the AB boundary after the B, before the market hits the appropriate extension. Alright? I am projecting live. You can call me out and you're going to have the recording. I'm projecting live that next year this market, I don't know when, but this market in any way is going to come down to here. You can call me out. Oh, you told us. Yes. It's a projection, everybody. Remember, this is no trading or investment advice. But if everything goes with the Forex market, it's predictable to a degree, everybody. This is how we make money consistently. It's predictable to a degree. Okay. And lastly, for today, we can go to AUDJPY daily chart and see a few things, right? Delete, 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 delete. Alright, we need to reverse the Fibonacci. So where is the low? A to B. Give me a second. A to B. Boss, my chart is different than yours. Well, I'm using the New York close charts. Everybody, there is no right or wrong, okay? Now here you're going to see, everybody, the market is going to break the original one. And then if we would chart the original one more time. Oh, price action, you know. Give me a second. From here to here. From here to here. This is now the original one, right? Why it's up? Because the market broke, everybody. This is the A, the market broke. See? The market broke the A. Okay, everybody? Now listen up. Trading, right? I'm going to delete this one, not to mess up with your head. And I'm going to start to chart the original on the upside. And on this original one, I'm going to chart the contrarian. Okay, the contrarian A to B. That's the contrarian A to B. Give me a second. And I'm trading the contrarian, right? I'm shorting the contrarian. Okay, everybody? No, I'm not buying the original one. See everybody, the value of this. When comparing larger time frames and smaller time frame, it's possible that the contrarian Fibonacci on the larger time frame is the original Fibonacci, and or the Fibonacci, the confirmation, on the smaller time frame, and vice versa too. So when the monthly original is down and the weekly original is down, and now, and I'm looking for alignments keyword, am I going to have a better chance if I buy the original on the daily, or I'm going to have a better chance if I short the contrarian on the daily? And this is called alignment. Make sense, everybody? Trading in the direction of the greatest force. Yes, sir, absolutely. It's a probability. No, there is no right or wrong. It's a probability game, right? Game, it's for a lack of a better word, it's a probability profession. So this market, sure enough, is going to, at some point in time, is going to bounce back up to past resistance, and then this is the projection. This is what we're going to short. At least me, this is what I'm doing. Okay, everybody, I'm sorry I need to go. My time is up. See you back tomorrow. Chart the Fibonacci's, build your charts, everybody. Study the manual. Alright, study the manual. Take advantage if you can of the Black Friday. Study the manual. You have the pictures, okay, and the logic and everything. And see you back tomorrow. Until tomorrow, stay strong and chart.